Hi, I'm Keith McCullough. Welcome back to our contributor call with Seeking Alpha. Today I have Chris Sommers, who's the managing partner, the founder, and the portfolio manager at BluePac Partners, and we're going to talk about a short case on Monsanto. Chris, this Monsanto, this thing, I look at this thing, tops this year at 125. You got all the insider selling that came into it. You got a lot of storytelling on the street about why it's not going to go down ever. First volley, what do you think on the other side of that?
Sure. Well, Monsanto was a very large and direct beneficiary of the ethanol boom that really fueled higher corn prices. If you looked at Monsanto's prior 5 to 10 years of existence, it would screen beautifully. It's got a storybook set of financials. Earnings per share have grown at a compound annual rate of almost 20% in the last 6 or 7 years alone. So I think people take some false comfort in that that's the way the business just works going forward forever.
No cyclicality, no correlation to commodity prices, nothing.
Right. If you lift up the hood and have a look underneath, the details kind of paint a different picture. First of all, they have two businesses, seeds and genomics, which I think is what most people think of with Monsanto. And then the other is this segment called agricultural productivity, which is basically their legacy Roundup business is a commodity product today. All the patents have expired, and there's a chemical called Glyphosate, which is now globally produced everywhere. Mm-hmm. And actually in 2013, that commodity business was 34% of the earnings. And since 2009, that business has been 60% of the entire growth. That's come on the heels of the commodity itself, glyphosate, more than doubling in price. Mm-hmm. But going back to the seeds and genomics segment, they sell corn seeds, soybean seeds, cotton seeds, vegetable seeds, etc. Corn seeds is the bulk of it, followed by soy and then cotton. Mm-hmm. The corn seed segment has been the lion's share of the growth, over 70% of the growth in the last 6 or 7 or 8 years. So you can clearly, obviously, see that corn has been the driver of Monsanto's success.
Big time.
Now, what's happened is genetically engineered seeds have been around for a while, and in the soybean and cottonseed markets, it has already been 80% plus share of all the crops planted since 10 years ago. 10 years ago, though, corn seeds, only 25% or so of those were genetically engineered seeds. So what's happened is they got a double benefit. The first benefit was corn acres expanded dramatically in the last 10 years to plant more corn for ethanol. Soybean, cottonseed, whatever, wheat, all the other acres are more or less flat to 10 years ago. Corn's the only one that's gone up. That's because there's now 30+% of the corn crop goes to ethanol. Mm-hmm. So they got that big bump, and then also the market share went from genetically engineered seeds being 25%, let's call it, to close to 90% today. And most of that's all Monsanto's stuff, and kudos to Monsanto because they had the product and they have the seed that does increase the yields that the farmers needed to meet the demand. So they did deserve to be paid for that, and they have been. Now the question going forward is, what will the price of these seeds be with corn prices falling, and what will happen with the rest of their businesses? They've kind of admitted and conceded that the corn boom is over. They more or less said as much on their fourth quarter conference call.
They say that after corn goes down, I assume.
Yeah. Yeah, but now we're in the decade of the soybean, supposedly.
Oh, yeah.
Yes.
I heard that.
Yeah, but interestingly, if you look at soybean yields in North America, the average crop yields 10 years ago were 43 to 44 bushels per acre, and today it's the exact same.
Yeah,
so
exactly.
There's not really a lot of productivity increase in the soybean seed market today.
So if there's not a lot of productivity and it's highly correlated to prior price, how much of that price deflation in the commodity, whether it be corn, soy, or across the complex, do they have to realize in their own pricing?
Yeah, I follow you. What I think needs to happen is the seed prices need to fall probably at least 15 to 20% from where they are today, which will mean their revenues will fall 15 to 20% and their gross profits will fall 15 to 20%. My sources talking to farmers in the Midwest, seed prices are already in the corn market down 10%, which is significant because
that's huge. Relative to the peak. Because have these guys communicated to anyone that they actually have any kind of price deflation or elasticity to that in the model?
None of it was referenced at all on the fourth quarter conference call. But investors, I think, that want to try to figure out what might happen in the corn and soybean segments should look at their cottonseed segment because The cottonseed segment's seen gross profits actually fall about 30% in the last 3 to 4 years. And the cotton market kind of happened faster and more abruptly than corn and soybeans. Cotton had a huge spike into 2011 and has since fallen off much faster. And so you can see that even though cotton production's been fairly steady globally, Monsanto's gross profits from cotton are down quite a bit. And I think 3 years from now, if you look back, you'll see the exact same thing happen in corn and soybeans.
Well, this time, what you're saying is this time is not different. If you get deflation, and God forbid that is actually the macro call, in this case, this would be a clean-cut way for me to actually express that macro bet. Because if I have a downward bias to commodity price deflation, and a company that has not acknowledged that in terms of forward earnings expectations, this would be one of the top ideas I guess I'd come up with.
I think it's excellent. I think the earnings per share in the long term are off by a lot. In the near term, 2 years from now, earnings will probably be 20 or 30% lower.
But how does that compute? If you look at, typically, if I look at a stock that you don't like Deere, Deere trades at 9 to 10 times trailing earnings. So the task is figuring out what the real E is. In the case of Monsanto, it trades like 22 times trailing earnings on peak. Again, peak demand, peak expectations, and peak margins.
Yep.
So how the heck is this thing ever actually seen a real margin or a multiple compression in the stock?
Not in the last 10 years, but and it wasn't public much longer before that.
Well, that's the thing. People haven't experienced it. That's like you said, it's been an epic story.
Yeah, Monsanto benefits from the conception that their product is consumable and required every year, which is true.
Yeah.
I think what people forget is that farmers have a finite amount of dollars to spend, and it's pegged directly to the price of the commodity you're planting. So, in the case of corn, when Monsanto raised the price of seeds from $200 a bag to $320 a bag, that was made possible by the fact that farmers' incomes doubled in that same time frame.
Yep.
So there was money to be spent on higher priced seeds. Now that farm incomes, last year average farmers cashed out at $6 a bushel. Today corn's $3 to $3.50 a bushel. Something has to give. Most people I think are caught on that equipment spending will be down. Then there's also seeds and fertilizers, and seeds is a big chunk of that. Farmers will still need to buy seeds every year, and I don't think anybody can claim they won't. But the seed market is still somewhat competitive, and while Monsanto does have the best product and they can charge the highest price, that price is part of a range that will move with commodity prices. So when the middle seed guy lowers his prices 15%, Monsanto has to lower their price 15% too. Because Monsanto's product gives you, let's say, 15 extra bushels per acre. So when corn's at $3, that's 45 extra dollars of profit to a farmer. So a farmer will spend some portion of that extra to get the more yield.
Yep.
But if you can buy a cheaper bag of seed for $100 less, it's worth it to you to buy the cheaper seed and sacrifice the yield than to spend the extra $100 for only $45 of revenue, which isn't even your profit because you have some margins associated with bringing that seed to market and drying it and all of that. So. And the farmer also should share in some of the profit. Monsanto
and that's just, to your point at the beginning, that's 2/3 of the business. 1/3 of the profits come from the chemical side, which has been outright commoditized, is your point on that?
Yes.
Okay.
Yep. And that's an interesting situation too. And the market's a little murkier to figure out on the glyphosate business, but you can look at some publications in China, who's a huge producer of this stuff now. And in 2012, glyphosate prices were about 30% lower than they were last year. And China's producers were both profitable and adding capacity in 2012. So in the last 5 to 6 months, glyphosate prices have fallen 20 to 30%. China's had overproduction relative to sales in the last 7 of 8 months. So it looks like the margins in the glyphosate business are headed back towards 2012 levels, which are dramatically lower than they were last year. That alone will shave off a big chunk of the earnings per share.
And this thing looks, seriously, this is the kind of stock to me that looks like it get cut in half, because I have a macro view that's completely aligned with your bottom-up view, and again, I'm looking at peak in terms of expectations, margins in the top line. If you kind of look at the bulls and their storytelling, is there any thesis drift whatsoever in terms of how they've gone throughout the year?
Well,
You're smiling, I think there is.
Well, I think people had this notion that it had the capability to grow the top line in the high single digits in kind of perpetuity.
Forever, yeah.
Yeah, and then the bottom line fall through would be something in the double digits. Well,
you'd have to believe that if you're going to pay
20 plus times on the stock.
Yeah.
Yeah, definitely.
Okay.
And then the company's been overcapitalized because they made a lot of money in the last 5 years, as did everybody in the ag space. It's not unique to Monsanto. So with the recapitalization of the balance sheet, there was this hope that they could have earnings growth go into maybe the 30% for 1 year, because you get 15% accretion from the massive buyback plus the regular 15% per year earnings growth. And some bulls were talking about $8 to $9 a share in a few years, and you put a 20 times multiple on that, and it looks like an attractive thing to look at.
Yeah,
today.
I just love that. When you just slap a 20 times, the market's coming off its all-time bubble highs. You got a stock that's got 55 billion in market cap that's clearly in its own little bubble, and we're just going to slap a 20 times earnings multiple on that forever. And it's going to come via buyback, which, by the way, doesn't have very, very impressive returns on invested capital. So that's where they're at now. That's they want them to buy back the stock at like 100. Where do they want them? 108.
Well, it's actually an interesting situation. In the fourth quarter that just ended, August 31st, the company repurchased $6.1 billion worth of stock in that very small window of time. They were actually over 20% of the trading volume in their own stock during that time frame, which is a massively fast repurchase.
Wow.
So you got to ask yourself,
what was the average? Do you know what the average price
was? It was like 3 points. Oh, the average price, I think, in the 100 teens.
So they didn't exactly buy it smartly either.
Well, I think
they're not good traders.
I think in a couple of years' time it will have looked maybe even sillier than it does right now. If the stock falls.
But if you're the guy who owns it forever, the minute that the stock goes down, you're calling the CFO saying, "Hey, when are you going to buy the stock?" This game has gone on since the caveman. I don't think that this is unique to Monsanto going through this learning exercise. But what you're saying is that they were quick, abrupt, and that's what they did. There's pressure on them to do it.
Well, there's not only pressure, but management of Monsanto earlier this year laid out a framework by which they said they could double their earnings per share by 2019 from $5 to something close to $10. Now that you're looking this summer at commodity prices and what your end markets look like and what your farmers, your customers are likely to do, not to mention the glyphosate market, which started to roll as early as March or April, you need to be able to present an earnings guidance number that still has mid-teens growth. Otherwise, no one's going to believe your plan. So that's why I think they did the massive repurchase so fast.
Yeah.
Like the size of it makes sense. $6 billion, they were overcapitalized. They could have a few $1 billion of debt, of course. But why would you do it so fast?
Yeah.
The reason is if you get all those shares in the door by the end of the fourth quarter, and then you got to go make your next year's earnings guidance, you can make guidance now that has double-digit earnings growth. And if you look at the net income that's implied from their guidance, net income's hardly growing at all. The earnings are growing, but mostly all from the share repurchase. So you can already see the business is substantially deteriorated.
What percent, don't tell me that this management team gets paid on earnings per share growth.
To be honest, I haven't actually spent a lot of time looking at it.
I mean, because you can only manufacture, these guys are supposed to be manufacturing other things other than earnings growth on that level. But you can only do that for so long until people say, what's the organic growth rate of your core business?
Yep.
How many people, there's only 5% short interest in this stock. It's Vanguard, BlackRock, Fido, they own all the big positions in the stock. Obviously, that's the kind of position that they'd have after it's been a great story. Who else is bearish? Is anybody else really bearish on this?
I haven't really talked to anybody about it that is bearish. It's been kind of a darling name across the investment community. I just don't know that people have done a lot of rigorous analysis into what the actual underlying business is. And in the case of selling seeds to farmers, it all comes down to how much money those farmers have to spend. And when you've got this deflationary environment in crop prices, there's just less money to go around. And that impacts seed companies, it impacts fertilizer companies, it impacts equipment manufacturers. And I don't know why my view is so unique, because it seems straightforward what's happened in the glyphosate market.
Well, in many cases, again, this one kind of reminds me a little bit like CAT, where they have these big slide decks, they give them to their sell side guys that love it forever, and then the buy side guy who's a rookie gets this thing that says, okay, look, we're going to be earning $10 a share in the year 2019, and as Godot comes in, it's going to be that too. You end up with this narrative where people have these very long-term views of something that's highly cyclical. And this thing, like I look at this and I'm like, oh my God, this guy could be like really right, really, really fast. But I wonder if you need management to actually acknowledge what the commodity market has already acknowledged, or if the market's dumb enough to wait.
Well, management's doing something very kind to the long investors, and they're giving them a get-out-of-jail-free card.
With the buyback.
Not just with the buyback, but with the guidance. It seemed pretty clear that they're not going to make their guidance. And they guided at the low end of the range, which was kind of disappointing, I think, to most people anyway, because most people thought they were going to do 6 or better. The bulls probably thought they were going to do 650 or 7. So they guided 575 to 6. So they held out hope that on the top end, they could meet what people hoped they could get to. Now, I don't see any way they could do better than 550. So I think they're going to do this quarterly kind of...
Ever or this year?
This year. Next year should be lower, because assuming corn and soybeans stay low, which I think they will. So what they're doing now, which is very kind, I think, to the long investors, is they're probably going to lower the guidance for the year each quarter by 10, 20 cents here and there, and it'll just get a little bit lower. So people have lots of time to get out of this, which is the nice thing to do. And that's what you want to do when you're an S&P 500 company. You want to like gradually, grind down. You don't want to have some upset where the stock falls 30% in a day.
See, this is what we wanted to show between Hedgeye and Seeking Alpha. We wanted a great hedge fund manager, analyst, to kind of say, look, management's being really nice about this short case. I mean, this is an interesting one. It's got the macro view that we obviously share here at Hedgeye in terms of quad 4 deflation, we call that, in commodity prices. But it also has Chris's explicit view, which is bottoms-up research. And again, you can find that on Seeking Alpha's website. Again, he's Chris Sommers. I'm Keith McCullough at Hedgeye. At Seeking Hedgeye is also our Twitter handle as well. Thanks.